What's up, guys? Alvaro here, and welcome to the Bilingual Stock Market channel again. On this channel, we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. And in this video, and as I do it Mondays through Thursdays, I want to make a quick stock market update. So I want to break down some technicals, going over S&P 500 and the Nasdaq 100, but also breaking down from a technical standpoint 4 stocks that tomorrow are going to be on the very top of my personal watch list. So without further ado, let's get right into the video. And today we had a green day all across the board except for the Dow Jones, which broke even. However, Russell 2000 went up today 0.34%, Nasdaq went up 0.73%, and the S&P 500 went up 0.30%. And this morning at 8:30 a.m. Eastern Standard Time, finally at last, we got the CPI data report, which came out pretty much in line with what was expected. So the expectations were around an increase month over month of 0.3%, and that increase ended up being 0.4%. When it comes to year-over-year inflation, the expectations were at 5.3%, and the report showed an increase year over year, as I just said, of 5.4%. There were some categories that came out way hotter than expected. Beef, guys. The increase month over month was almost 6%. Unbelievable. New car sales, an increase year over year of 8.7%. And in the case of food, the general increase month over month was 0.9%. And this afternoon, something very important from what I said happened. So President Biden addressed the nation, talking about addressing the very big problem that we are having as of now here in the US when it comes to supply chains. We are having a serious issue over here, guys. And even though we had a bit worse than expected CPI data report, you guys can, as I just told you, the Nasdaq and the Nasdaq 100 ended up going up today. So the markets are starting to realize, are starting to think that inflation is being caused by disruptions in supply chains, and that is something that the Federal Reserve has been saying over the last month. And obviously, in the case, I don't want to get political here, guys, obviously, because this is a YouTube channel about the stock market, but it caught my eye, right? President Biden talking about disruptions in supply chains, and they were, last year, they were pretty much demanding the country to be shut down. And we did it. We shut down the country for 6 or 8 months. And that ended up, creating a lot of issues when it comes to supply chains. And now we are seeing very negative, consequences because we shut down the country. And now President Biden is realizing that we have a serious issue over here. So the markets are starting, as I just said, realize that inflation might be transitory, or that at least maybe it won't be transitory. But the markets are starting, maybe it won't be transitory in the short term, but the markets are starting to believe that the inflation phenomenon that we are seeing over here is being caused by disruptions in supply chains. The increase when it comes to beef, guys, 6% month over month. So who in his right mind is going to believe that beef is going to keep on increasing at a 6% rate for the next 2 years? This is something that is very likely to be transitory. And this is a discussion that I have been having with a lot of my bear friends in regard to inflation, because for the most part, inflation is a monetary phenomenon. So we have a central bank that starts to print money out of thin air, and that ends up causing an inflation issue. However, in the case of the US, this is a very special case, guys, because the United States dollar is the world's reserve currency. That implies that the demand for the US dollar is pretty much infinite. And I'm not saying that the Federal Reserve can keep on, printing money out of thin air forever. But the central bank of the US, the Federal Reserve, has an advantage, a clear advantage relative to the other central banks of the world, because there is an infinite demand for the US dollar. So the main thesis of the bears out there when it comes to inflation is that inflation is basically a monetary phenomenon, and that inflation is going to obviously get out of control because the Federal Reserve has been printing money out of thin air in order to purchase $120 billion on a monthly basis in order to aid the economy. However, I believe that inflation is being caused by disruptions in supply chains, and I believe that the Federal Reserve is going to get away with it. I might be mistaken, because they have the advantage, or the Federal Reserve has a great advantage of being able of printing money out of thin air for some time, because the demand for the US dollar is pretty much infinite. We have a bunch of governments, or most of the governments of the world, needing dollars, and the currency that is commonly used for international trade is the US dollar. So I think that the fact that President Biden is, recognizing this problem is positive for the markets, and this pretty much justifies the behavior that we have seen when it comes to the stock market in the last few days. So we have seen Tesla. We are, as of now, in a moment in which we have inflation fears, obviously, and we are seeing higher multiple stocks going up a lot, such as the case of Tesla. So, in my opinion, this is the vision that the markets are starting to have as of now when it comes to inflation, that it is being caused by disruptions in supply chains. And today at 2 p.m. Eastern Standard Time, we had the Fed minutes, and the Fed said that they might start the tapering process by mid-November or mid-December, and that process is going to imply a reduction of $10 billion in bonds purchases, and $5 billion in mortgage-backed securities. There is no signal at all, guys, whatsoever about rate hikes, and some members of the Federal Reserve said that inflation is likely to remain elevated in 2022, next year, which might be the case if we cannot figure out the disruptions in supply chains that we are seeing as of now, sorry. Okay, if we take a look at the sectors that trade inside the S&P 500, today was a nasty day for the financial sector. The 10-year Treasury yield ended up going down. And take a look at the financial sector, guys. So it ended up going down today 0.57%. But at some point this morning, guys, at 10:13 a.m. Eastern Standard Time, the financial sector was down almost 2%. Unbelievable. Today, we saw a slaughter of financial stocks out there. The best performing sector today was utilities, which ended up going up today 1.13%. This is a defensive sector. And the tech sector ended up going up as well, 0.61%. So for the most part, if the tech sector had a negative day, guys, we would have had a horrible day today in the S&P 500, because the financial sector got absolutely obliterated. So the tech sector was the sector that pretty much did the heavy lifting. And now I want to show you guys another trade that I took or that I closed today in a successful way with Pinduoduo, guys. I have taken 3 successful trades, or I have closed rather 3 successful trades in the last 3 trading sessions on Pinduoduo. Jeez. So yesterday, October 12th, correct, I purchased 100 shares of Pinduoduo at $94.23, paying $9,423. And today I sold out of my 100 shares at $96.82. I ended up leaving some money on the table, but that's fine, guys. We cannot time every single trade perfectly well. So I was paid $9,682. So I ended up making $260. Nothing crazy. This was another base hit, and those are the ones that are going to put me in the Hall of Fame. S&P 500. as I just said in the introduction of this video, went up 0.30% and it closed today's trading session at 4,363 points. And take a look, guys, at the spot in which the bulls of the S&P were rejected today, right at this 50 SMA on the 4-hour chart at 43.73. So the main task tomorrow for the bulls of the S&P would be going up and test 43.93. 43.93 is a previous area of overhead resistance in which the bulls of the S&P failed on 2 occasions back in July. If the bulls can actually reconquer or take on this 50 SMA on the 4-hour chart, then the picture, the general picture of the S&P 500 is going to start to change a bit. And in the case of the bears, I would say that they need to at least, guys, take on 43.30. 43.30 is an area that acted as lower support on 3 occasions in July. So, and as I said in yesterday's video, let's see what happens tomorrow. I think that the next meeting of the Federal Reserve is going to be on November 2nd and November 3rd. So we no longer have any other sensitive economic data coming out. Obviously, the earnings season kicked off today, and that is going to be a market mover. Mostly when it comes to the earnings of big tech stocks. And I think that the S&P 500 is starting to look a bit better, guys. I don't want to count my chickens before they hatch, but let's see what happens, guys. I think that the main task that the bulls need to carry out would be taking on 43.93, and after that they have a very important task ahead of themselves, because they would have to take on this 180 SMA on the 4-hour chart at 44.23. And now let's go ahead and take a look at the Nasdaq 100. And mind you, guys, I haven't taken a look at the Nasdaq 100. I have been very busy today, so this is going to be a live reaction. Nasdaq 100 went up 0.77%, so out of the old major indices, this was the one that had the best performance today. And the NDX closed today's trading session at 14,774 points. Jeez, guys, we closed today's trading session 3 points below 14,780 points. That, if you guys remember, I have told you is a very important area in technical terms, because we are talking about a former area of support back from August 19 and also back from July 27. So obviously the most important task for the bulls tomorrow is going to be bursting above this 50 SMA on the 4-hour chart at 14,880 points. 14,880 points. Sorry, I had said that the wrong way. So if the bulls can take on this 50 SMA, maybe can they fill the next gap up to 14,000 to 15,000? That would be the next gap up, guys. So the bulls have 2 very important tasks ahead of themselves, guys. First of all, taking on this 50 SMA and the 4-hour chart, and then filling the next gap up to 15,000 points. 15,000 points is an area of overhead resistance in which the bulls of the NDX failed on 2 occasions back in mid-July. And in the case of the bears, I would say that maybe if they happen to have a good day tomorrow, which I don't think it is going to be the case, but we will see what happens, they should try to take on the low point of yesterday's trading session at 14,632 points. The relative strength index of the NDX is at 46 points, very healthy from a technical standpoint. So yeah, this push, this move, or this push higher could be carried out, guys. No doubt about it, in one single trading session with a good momentum. And now let's go ahead and take a look at JP Morgan, which is going to be the first stock of this video. JP Morgan reported earnings today, and the stock of this company got crushed, even though they beat on EPS and revenue. So JP Morgan went down today 2.64%, and it closed today's trading session at $161. And take a look at the relative strength index of JPM, guys. She's 25 points. the stock of this company or the stock of this bank is severely, but I mean severely oversold as of now. Let me see if I can find over here the earnings report. So I don't have the information handy over here, so let me pull up CNBC. So they did EPS of $3.74 versus $3 estimate, obviously beating the analyst consensus, and revenue came in at $30.44 billion, beating the estimate of $29 billion. So this was a beat all across the board, and take a look at what happened, guys. The stock of this bank got absolutely crushed. We can obviously make the case that the drop that we saw today is not necessarily because of a poor earnings report, but on the flip side, it has to do with that the inflation report or the CPI data report came pretty much as expected, and JP Morgan is for the most part a pure inflation play. This might be the bank sector, and the financial sector would be for the most part the only beneficiary of an eventual interest rates hike, which is very likely to happen, I think, maybe by the end of next year. So in technical terms, guys, $160 or $161-ish, let's round it up, is a very interesting spot in order to pick up some shares of JPM. So $161 is a previous area of overhead resistance in which JP Morgan felt back on August 12th, but we are also talking about a former area of support that acted as such back in late May. And on top of that, take a look at how the bulls of JPM managed to find support today right at the 180 SMA on the 4-hour chart at $161. So, and taking into account that this bank reported very good earnings, and also taking into account that JPM is very oversold, we can see the relative strength index at 25 points. If tomorrow I happen to see some sort of process of consolidation slightly above $161, if JPM can close hourly, let's say at least 2 hours, slightly above $161, I am going to be tempted, guys, in order to pick up some shares of JP Morgan, in which case my price target is going to be the next important area of overhead resistance at $167. $167 is an area of overhead resistance in which JPM failed back in late September, but it also failed back in early June. So if I were able to take this trade the way that I am describing it, picking up shares at $161 and selling out of my shares at $167, I could be making a 3.40% profit. So watch out for JPM. This bank reported very good earnings. The stock of this company is severely oversold. And if tomorrow we happen to see a recovery when it comes to the 10-year Treasury yield, then I think that JP Morgan might be a runner, and therefore the stock of this bank is going to be able to fill this gap up to $167. And now let's go ahead and take a look at Disney. And in the case of Disney cheese, guys, the stock of this company is another stock that has gotten absolutely decimated. Disney ended up going down today 0.10%, and it closed today's trading session at $172.96. And this is a stock of a company this is the stock of a very good company, guys. And I think that maybe Disney won't do much before the year ends. But if the process of reopening back up the economy keeps on going smoothly, and if the world happens to be fully reopened next year, I think that Disney is going to be a runner, and I think that Disney has a first shot of being at all-time highs by mid of next year, the latest, I would say. So if tomorrow, guys, Disney starts to consolidate at around $172, which happens to be a former area of support back from late August, also back from mid-July, and lastly back from mid-June, I think that that is a very attractive spot in order to pick up some shares of Disney. So if I happen to start a trade with the stock of this company, purchasing shares at $172, then my price target is going to be the next important area of overhead resistance for Disney at $180. $180 is an area of overhead resistance in which the stock of this company failed back on August 24th, also back in late August, and lastly back on late May. And at the same time, we are also talking about a former area of support in which the stock of this company found support back in early March and also back in mid-February. So if I were able to take this trade the way that I am describing it, picking up shares at $172 and selling out of my shares at $181, I could be making a 5% profit with the stock of a company that offers pretty much, for the most part, zero risk at all. And if we take a look at the relative strength index of Disney, it is at 42 points. So I think that if the bulls start to gather momentum slightly above $172, the possibility of filling this gap up to $180 is going to be definitely on the table. And now let's go ahead and take a look at Penn National Gaming. And in the case of Penn, guys, I am thinking about a potential momentum trade when it comes to the stock of this company. So Penn ended up going up today 0.93%, and it closed today's trading session at $74.69. So I am going to zoom in here on the 4-hour chart and take a look, guys, at how the stock of this company today got out of this wedge in which Penn has been trading since mid-August. So as of now, the bulls are dealing with an important area of overhead resistance at $75.70 each, which is this 180 SMA on the 4-hour chart. But I'm thinking, guys, that the fact that the stock of this company could or was able to get out of this wedge is very positive, and I'm thinking that if the bulls can take on this 180 SMA on the 4-hour chart, momentum could be kicking in, and maybe we could see this next gap being filled up to $85. $85 is a previous area of overhead resistance in which the stock of this company failed on 2 occasions back in August and September, but the bulls of Penn also failed at $85 back in early June and lastly back in late May. And on top of that, we are also talking about a former area of support back from April 20th. So I'm thinking about a momentum trade. The second, guys, Penn can take on $75.62. I am going to be very likely to pick up some shares of the stock of this company. So let's see, guys, about the profit. So picking up shares at $75.62 and selling out of our shares at $85, we are looking at an 11% profit. So watch out for Penn National Gaming. And if we take a look at the relative strength index, it is at 56 points. Very, but very healthy from a technical standpoint. So I think that if the bulls can take on this 180 SMA, this gap up to $85 could be easily filled. And now let's go ahead and take a look at the last stock of this video, Clover Health. And in the case of Clover, I already own, I think that 300 or 350 shares of Clover, guys. Let me check on that quickly over here. So how many shares do I own of Clover? Let me see. So I own 300 shares at an average cost of $8.48, and as of now I have an unrealized loss of $140, but I couldn't care less about this unrealized loss. I was checking on the short interest of Clover today, and it is at 14%, nothing crazy. The stock of this company, I mean, any short interest above 10% is already considered a high short interest. But we have seen, in the past, a short interest when it comes to Clover above 30%. So that is no longer the case. So I am not necessarily thinking about a short interest coming up in the case of Clover, but I am bullish in this company, okay? So let me zoom in here on the 4-hour chart and take a look, guys, at how, now I gotta zoom in a bit more, right? There you go. Okay, not even, let me zoom in a bit more, guys. So take a look at how the bulls of Clover, guys, are about to test this 180 SMA on the 4-hour chart at $8.23. By the way, I didn't say this. So Clover went up today 0.37% and it closed today's trading session at $8.05. So I'm thinking, guys, and since I already own 300 shares, I am going to simply hold my shares. I am holding. And I believe that if the bulls of Clover can take on this 180 SMA on the 4-hour chart at $8.23, they are going to be able to fill the next gap up to $10. $10 is a previous area of overhead resistance in which Clover failed back on August 12th and also back on July 22nd and also back on July 12th. So we are talking about an important area of overhead resistance in which the bulls of Clover are very likely to have a hard time while they go up. So from $8.23, and for those who might be interested in taking a trade with Clover, so from $8.30 or $8.20 up to $10 or $9.94, we are looking at a 17% profit. This would be a phenomenal trade, and in my case, my price target is $8.48. So yeah, I would be pretty much locking in a profit of 17% as well, guys. So Clover is looking nice, guys. Take a look at how the bulls managed to burst above this 50 SMA on the 4-hour chart at $7.40, which was an area of lower support back from August 20th. So watch out for this push to the upside, guys, because the relative strength index of Clover is at 59 points, and I think that momentum is very likely to kick in if the bulls of Clover manage to take on $8.25. And with Clover, I am going to wrap up the video. Thank you very much for your attention, and thank you very much for hanging out with me once again. Remember and keep in mind, guys, that here on the Bilingual Stock Market channel, we are posting stock market update videos Mondays through Thursdays, 3 or 4 hours after the market closes. So if you want to get all of the notifications of all of our videos in a timely manner, you have to be subscribed to the channel, but you also need to activate the notification bell right up there. Follow us on Instagram as well, guys, at Bilingual Stock Market. And remember that this is the Bilingual Stock Market channel, the YouTube channel, in which we talk about the markets, but we do it in English and Spanish as well, so you can pick your preferred language. But most importantly, this is the YouTube channel in which we know that the wonderful world of Wall Street is not for geniuses, it is for entrepreneurs just like you guys and myself. My name is Alvaro, and I will see you guys tomorrow once again, 3 or 4 hours after the market closes. Peace out.